What's up, guys? It's Ryan. I wanted to do a quick little video today on utilization. I feel like utilization is the most undervalued tool or the most misunderstood factor when looking at your credit score. Let me explain to you why. Your credit card utilization is the one single factor that can increase or decrease your score by 100 points or more or less in a matter of 30 to 45 days based on when you either pay things off or when you spend money on a credit card and then it hits the credit bureaus and affects your utilization factor. So let me explain to you what that means. So if you look at mine, all right, so you guys know that I'm always posting things on here. This is really my Credit Karma account. My credit utilization right now is at 7%. I'm trying to get it to the, you can see 7%. Now if you look at the scale tells you that 9% and lower is what's going to help boost your score. You're actually going to get points for that. Once you hit 10%, it's not that it negatively impacts your score, but they're taking away points from you. So if they're taking away points from you, that is negatively impacting your score, in my opinion. It's just like saying if you're in school and you're trying to get into college, if you get an 80 average, an 80-point average, or your average for the year is an 80. It's like a B grade. Well, that's good, but it's not an A average. And if you have an A average, you're typically going to get preferential treatment. You're going to get more options. You're going to have more people interested in you, and therefore life just becomes better. When you're looking at your utilization, once you hit that 10% mark, so from 0 to 10 or to 9%, you're good. You're getting points. But once you go down from 10 to 29%, you don't get any of that extra juice that you get by having a lower utilization. And then when you hit 30% and higher, forget it, guys. That's when they actually start taxing you or they start penalizing you. And what you have to realize this, guys, it doesn't take much more than just daily discipline to understand what are your total limits, what are your current balances, and what is that utilization factor. It's so imperative, guys, that you realize this in everyday spending. I don't care what your excuse is. If for whatever reason you need to make a purchase, if you're already high on your utilization, don't use a credit card. I used to say put every single thing on a credit card. I retract that statement, and I'm going to tell you why. I say that because I know what my limits are. After a year of doing credit and building credit and establishing lots of credit, which I have $170,000 or $160,000 of available credit, plus charge cards, which you can't see those because there's no set limit on that. I used to say put every single thing on a credit card. Now I would tell people don't do that. Maintain a 3 to 5% utilization factor. If you want to maximize your score and have the absolute best score from the utilization factor alone, make sure you're only using 3 to 5%. Now, there's a couple ways you can still take advantage of that. Let's say, for example, you don't have a lot of credit. So you would hit that 5 to 9% factor or the utilization factor very quickly. What you need to do is you need to start paying your card off every week. I pay my cards off every 2 weeks. If it's a card that has a really high limit and I only use it for maybe it's an auto bill and it's only 3 to 5%, I pay that off at the end of the month or I pay it whenever the bill is due. If it's a card that I'm maximizing points or if it's a card that for whatever reason I'm trying to use to get those types of rewards, I'm going to use that card more frequently. If I happen to put a large purchase on it and I am encroaching that 10% utilization factor, what I'm going to do is I'm going to pay that card off at the end of the week or at the end of every 2 weeks. Not at the end of the month or at the end of the billing cycle when 30 days it says, hey, you spent X amount and 15 days later you then have to pay that bill. No, that's the worst thing. I've actually heard with American Express, people get financial reviews because what they do is they max out their spending ability or their credit limits, depending on the card, and they say, I'm not paying until the bill is due. Well, guess what? If you overexert yourself and you're spending close to whatever the total limit is that's available to you, some banks and lenders are going to get nervous, especially because banks like American Express and Chase and even Barclays, they're checking your credit score every 14 to 15 days. Why do you think they can show you an updated credit score every 2 weeks? It's because they're monitoring you. So think about this. If this is your total limit and you're encroaching on that total limit, anybody's going to get nervous. But if this is your total limit and you get to here and you say, oh, I'm going to pay it back down to here, you may not pay the whole thing off, but at least pay a portion of it down. Keep it in check so that it never runs away from you, because there's what happens is people spend their limit and they say, oh, you know what? I just spent 90% of my limit. It's fine. I'll pay it next month. And they pay it down to 30% or 40%, or maybe they pay it down to 10%, and then they forget, and then it runs away from them again. Well, if you're a bank or a lender, you're going to start to get nervous because that person's going too far down the line. And at some point in time, they start to say, hey, wait a minute, Ryan may not be able to come back from this. And then they start cutting lines, or you make a payment, they reduce your limit. I've seen it happen, guys. I've seen it happen to people that make a lot of money. I've seen it happen to people that don't make a lot of money and they just have lower limits. It doesn't matter the situation or the case. The odds are, and this is what I would always say, at the end of the day, would you lend you money based on your current credit score, which is your credit history? How much credit do you have? How long have you had it? How much of it are you using? And do you pay everybody on time? It really comes down to those simple key metrics, guys. So I hope you guys found this really helpful. To me, it's so imperative and it's so important, and it should be taught in school. We're not taught this in school. I think kids at an early age, they should be taught the importance of understanding how much money do you have, how much are you spending, and are you saving and paying everything on time? Guys, it's really that simple. We have to just, they're like rudimentary basics that we have to instill into our brains, because unfortunately we're creatures of habit. We are a product of our environment. If we don't start implementing these disciplines now, or when we're 15 years old like my nephew, unfortunately, guys, we end up letting life run away from us. And unfortunately, that's a painful life. So I hope you guys found this extremely helpful and educational. Obviously, I'm always looking for feedback. I'm always looking for things that people like you can share with me. Tell me things that you have questions about. Tell me things that I can show you. I'm not here to show you my Lamborghini in my garage, even though Tai Lopez is one of my most favorite people in the world, because Tai Lopez understands the importance of discipline. He understands the importance of self-education, and like Gary Vaynerchuk always talks about self-awareness. If you're self-aware and you understand where you are in life, and you educate yourself like Tai Lopez always says, chances are right now your life is going to be pretty much where you want it to be. If it's not where you want it to be, at least you should be heading in the right direction. And that's ultimately what I want for everybody. So, hope you guys have an awesome night. Hope you found this helpful. If you did, please like it. Please share it. Please tell me how I can be better. Tell me what I can do more to help you and your family and your situation. All right? Love you guys. Later.